you're watching BTTV. This is Market Today. I'm Tanya Aneja, and with me, as always, is Shail Bhatnagar, our markets editor. Well, it's the final day of this festive week, and Indian markets are likely to resume their upward climb. But will the momentum sustain going forward? Well, we'll discuss this and much more. But first up, the top headlines for you. Indian stocks are likely to bounce back on Friday as investors and traders punt long on beaten down counters on the first day of a fresh weekly expiry on the Nifty. Festive cheer in India is unlikely to be dampened by weak overseas cues. Investors look forward to Muhurat trading on Sunday as well. Quality earnings remain the key for further advancement in indices as investors pore over financial data to pick winners. M&M, ONGC and Coal India are among 5 Nifty stocks to report their second quarter performance today. Very good morning, Shail. It's Friday finally, and happy Dhanteras to you and to our viewers as well. And of course, it's the final day of this wonderful festive week, and you tweeted as well कि दिल्ली में बारिश हो रही है. और क्या चाहिए, Shail?
जी बिल्कुल 200-250 पॉइंट आज निफ्टी पे मिल जाएं तान्या जी तो बड़ी मेहरबानी होगी प्रभु की लेकिन जितना दिया है वो ही बहुत है. गुड मॉर्निंग टू ऑल आवर व्यूअर्स एंड अ वेरी वेरी वार्म वेलकम टू thousands of new viewers who join us on Market Today at BTTV on a daily basis. So Tanya, what man has done, nature has cured. So there is a nice light shower all across Delhi and surrounding areas that's put the AQI to bed. It's a very clean, very fine, wonderful November morning in Delhi. Just as it used to be 20-30 years ago, and the weather's fine, festivities are there. Tomorrow is a holiday, day after tomorrow both of us will meet for Muhurat trading. It's Diwali over the weekend and it's Dhanteras today, so all the good luck and all the best wishes to everyone who's watching us. May the goddess shower all her blessings on all of us और सबकी इच्छाएं पूरी हो.
बिल्कुल शैल, सबकी इच्छाएं पूरी हो और इसी के लिए आई थिंक वी बोथ आर हेयर टू discuss markets and for profits and everything. But coming to markets now, Shail, Nifty's trend, if you see, that is positive. It is hovering around 19,400 mark. So let's discuss markets. I mean, what should be the strategy for today and where do you see Nifty?
So let's get to brass tacks, Tanya. Of course, the festivities are there, but there are 2 or 3 important developments that have happened across the globe. You see the index comparative in front of you, the Nifty and the Nifty 500, as also the Bank Nifty. Mild bit of profit booking on Nifty yesterday, 19,400 in front of you, 48 points lower. Remember, it was the weekly expiry, therefore there was this mild bout of unwinding of long positions. People want to take money back home. It's the weekend, it's the festival, धनतेरस, सोना खरीदना है तो वो पैसा तो बाजार ही आपको देगा और उसी वजह से you saw a mild bite of profit booking happening. The moot point, Tanya, here is that there was a statement that came from the US Federal Reserve Chairman Mr. Powell, who said that the Fed doesn't seem to have done enough to control inflation and to bring it down to its comfort level of 2%. But that also triggered a bit of a sell-off on the Dow markets as well as the Wall Street, and of course the US 10-year bond yield spiked. So this is the broad background of how Friday's working. So sell-off happened in the US markets. Asia is weak. We are likely to have a muted start. Given the fact that over the last 5 days, Tanya, we've added about 1% each on the bank nifty and the nifty, which is somewhere like 430 points on bank nifty, as also somewhere like 190 points on the nifty. It's okay. Friday will be a sideways to weak trend. You will see the index consolidating. The good part, Tanya, is that we are above 20 DMA when it comes to nifty, and that means that the bulls remain in control. 19400 was defended very well on the nifty yesterday, and the most important parameter, which is the crude oil, is now down for the third week in a row, somewhere like July lows in front of us, and that should provide comfort to bulls, as also the fact that you will have very, very strong earnings coming in. Today we have on the nifty Hindalco, Coal India, ONGC, and of course Mahindra and Mahindra. That will send the trend on the nifty. And in the wider market, you have Steel Authority, you have Eicher Motors, you have Bombay Stock Exchange. So these are the kind of companies that will be declaring their second quarter performance. When it comes to the options chain on the nifty, very, very strong supports coming in on 19,200 and 19,300 as far as the index is concerned, and the resistance at 19,500. That's how the nifty is positioned at the moment, Tanya.
Okay, absolutely got that. So that was Nifty for you. But let's discuss Bank Nifty as well, Shell. The trend there is also positive. I mean, the index is still above that 200 DMA level, and index consolidated in a narrow range yesterday, but ended 25 points higher at 43,684 odd levels. So what are now the fresh support and resistance levels?
So it's the 34 EMA which is providing a very, very strong resistance to Nifty Bank, Tanya. 43,800, 43,900. Over the last 3 trading sessions, the Nifty Bank has been unable to pierce it. Yesterday it did, but then obviously closed below 34 EMA. The good part is that it's the 20 EMA that is providing decent support at 43,500 levels, and this is a narrow band in which the Bank Nifty finds itself. But again, a weekly gain up about 1%, which is somewhere like 430, 450 points, and you've seen a very sharp rally from the low of something like 42,086 on 26th of October to where we are 43,686. So it's 1,013 point 1,300 point rally, and that is what is getting digested in the market. Bank Nifty has a very, very strong support at 43,500 and a very strong resistance at 44,000, Tanya.
Okay. I think our market guest is with us now, Shail. So let's welcome him. So Mr. Kiran Jani, who is the head of technical research at Janam Broking, joins us today. Good morning, Mr. Jani, and always good to have you on BTTV, and festive greetings to you. It's the final day of this wonderful festive week. So let's firstly discuss the technical market outlook. I mean, how are you positioned on Nifty today?
Thank you for the wishes, and wishing you all, your BTTV team, Selji and you, for festival greetings, and all our viewers too. Uh, yes. Now coming to the market setup, technically, if we see Nifty and Bank Nifty both are comfortably sustaining above their support level. Number one. Number two, whatever fall we have been witnessed last week or maybe 15 days, we can see that market is now facing resistance at 61.8% retracement of current fall. So that is the major resistance, number one. Number two, if we can see Nifty and Bank Nifty both are taking resistance of their respective moving averages also. So if you check Nifty, so Nifty has a resistance of 100 days moving average, while Bank Nifty is trading above its 20 days and 200 days moving average. So Nifty is slightly has a supply zone somewhere around 19,400 to 19,500, considering the technical setup. Second thing, now we can see the option chain. On option chain also we can see 19,400, 19,500 as a maximum call side open interest, which are showcasing us that there are chances a slightly profit booking will come. And as Sailji has mentioned that Sona Kharidna hai, so market only can sponsor this thing. So we can see slight bit of profit booking session in the first half. So in second half, if we find any opportunity towards 19,260 to 19,300, we would like to buy. So buy on dip will be the strategy for this weekend or maybe for next week also. But for that, we should have to wait at least 19,200, 250 to 300 level where we can go long on Nifty. Coming to the Bank Nifty is slightly positive, or I can say stronger than the Nifty, as they have a very good support at lower level, somewhere around 43,200 to 43,300. Looking at option chain on put side, we can see 43,200 as a maximum call side, put side open interest, which supporting the market. So in case any fall in Bank Nifty comes, we are like to invest or maybe go long on Bank Nifty somewhere around 43,200 to 43,300. So that is our buy zone. If any dips come in first half or a second half in Bank Nifty, we would like to go long 43,200 to 300. And
Right, sir.
for weekly expiry, we are looking target of 44,000.
Right. Good morning, Mr. Jani, and a very warm welcome to you on Market today. A couple of stocks that you feel could give supernormal returns over the next 1 year or so, 6 months or so, which you think are trading very, very strongly on the charts. If you could share some names, that would be wonderful for our investors and viewers.
Right. So if we're looking for the positional trades, I think many of the sectors and the stock specific things we can go long. So our first stock, as per Diwali picks considering, it's CRISIL Limited. If we check CRISIL Limited, stock is into the uptrends from December 2022. We can see June or July 2022. After that, stock was in consolidation pattern, or we can say it was trading into the rectangle pattern. However, during this all fall, CRISIL never fell below the support line or a rectangle pattern. So that rectangle pattern remains continued during all the volatility. Now at current market, we can see that CRISIL has given a breakout from that rectangle pattern and trading well above its 4,000 or 4,100 support level. At current market, you can see on monthly or weekly chart, we can find a flag pattern breakout also. So all the signs are giving a very good gist that CRISIL can give you a better return in upcoming time. So for any viewers is planning for buying any stock for 6 to 8 months or maybe 1 year, we are recommending CRISIL. We have already recommended to our client for this Diwali peak also. So 4,100 to 4,150 would be the buying zone for the CRISIL. 4,600 is our initial target, and if 4,600 cross, we can see 5,000 level also. So it's very promising counter CRISIL, and for this trade, we would like to keep a stop loss somewhere around 4,000. So CRISIL is our Diwali pick, and one more stock I want to highlight, that is Nippon India. Looking at the SIP number, it is at record high number one. So there is a fundamental tailwinds for the AMC company. Now you can see the Nippon chart on monthly chart or on weekly chart. It is trading on a big rounding bottom pattern breakout level. Stock is trading above or its moving average also. So Nippon India will be our next pick. We can buy it short term for short term also or for long term also. So as per short term, we are giving target of 420 for the top with the stop loss of 390. So Nippon and CRISIL both are our buy picks.
Fair point, and at least CRISIL has demonstrated multi-bagger tendencies over the last 15-20 years that I have seen the stock perform. A very well-known market face used to be invested in CRISIL for a very, very long time. The stock did absolutely nothing from say June of 2023 to somewhere like October, and then you've seen this smart burst coming in. Of course, it's a multi-bagger over a number of years that I've been tracking the stock. So a good technical thrust is also coming in as far as Mr. Jani is concerned, the other stock being Nippon India Asset Management Company. So these need to be purchased if at all you like them with another financial advisor's view, and in a piecemeal fashion on a monthly SIP basis. Mayuresh Joshi joins us, Head of Equity Research at William O'Neill India. Good morning, Mayuresh, and it's a pleasure to host you on Dhanteras. Our best wishes for the festive season ahead, as also on Dhanteras to you, your family, everybody at William O'Neill. Good morning and welcome to Market today.
happy Dhanteras to all of you as well. Hope this
I
year
think you'd
brings a
have
lot of
to.
joy, health, prosperity, and
Yes.
happiness to you, your loved ones, and all the viewers that we business today. So I think thank you for inviting me on the show.
Okay. Of course. It's always a pleasure to host you, Mayuresh. And given the fact that our viewers and investors would need a lot of money to buy good stuff on Dhanteras as also on festivities, let's share a couple of ideas that you have on your buying list for the year ahead. What looks good to you in the market? What is trading below its intrinsic value?
Sorry, Shail sir. I mean, I completely lost your voice. So if you can.
Mayuresh, what looks good to you which is trading below its intrinsic value and might add a lot of quality as well as price to investors' portfolio?
Sure. So I think at MarketSmith, what our belief is that Pidilite probably looks very interestingly placed. Now the stock has probably done nothing. And if you probably look at its previous historical valuations and where it is trading right now, I think it looks very, very attractively placed. Two things. One, the core portfolio that Pidilite has. Obviously, we know the Fevicol brand, we know the Fevikwik brand, we know the Araldite brand. These brands are growing at a very decent pace. And what the management commentary suggested in the quarter gone by, demand has come back very, very strongly, specifically in semi-urban rural areas. And as demand catches up with a lot of construction activity expected to take place in the next few quarters and years, as we are going through the mid-cycle of the real estate infrastructure story, both private as well as affordable housing will kick off quite significantly, giving a boost to a lot of Pidilite's products as well. The second element in terms of VAM becomes a very important component because VAM is a very important input cost for Pidilite. Quarter on quarter, it showed some element of increase. But over a longer period of time, the entire Chinese destocking, lack of demand, the European supplies, also in terms of expectations of how demand is catching up, has probably kept those prices low. And therefore, EBITDA margins should be on the higher side. Third, I think the list that they've probably got in terms of innovative products and the factories that they will probably operate out of, the expectations in terms of growth of these products is going to be significantly higher over the next few years. Balance sheet obviously has no concern at all. Promoter quality is top notch. And obviously, I think the new element that they're probably introducing created a lot of confusion in the market yesterday. The kind of NBFC foray, small retail loans, but I think they're restricting themselves to their dealer and distribution network, which is a very positive sign. And it's just a small pilot of 100 crores that they are experimenting with at this juncture. But if it turns out to be successful, I think the entire working capital cycle at their dealer distributor end can probably get sorted out by Pidilite at the company level itself, which in my opinion is a very, very good move. So historical valuations and where Pidilite is right at this juncture, I think there is a long runaway growth that this stock can probably deliver in the next few years.
Right. And Mayuresh, we were fortunate to catch Pidilite 2-3 days ago when the counter was, down in the dumps. I distinctly remember discussing it. It was a fall of 9 consecutive days. And you know it better than all of us put together that beyond that you see a nice bump up. So we caught it on 27th of October, somewhere like 2305. I'm sure it's a stroke of good luck that, Lady Luck brings on this show. But let's get to Kiran. Kiran, your view on Pidilite technically. What are the charts telling you? Yesterday it failed to break its 200 DMA.
So technically, if we check, like it has given a breakout from its falling trend line, number one. Number two, as you mentioned, it's also closed above its 200 DMA. And one more thing on intraday charts, if we check, it has given a closing above its inverted head and shoulder. So multiple bullish pattern we can see on Pidilite. So for the intraday purpose or for a short-term purpose, we can definitely buy Pidilite at current market price, keeping a stop loss of below 2400. And as per the technical chart pattern, we can expect target somewhere around 2600. So risk reward ratio is also favorable. So I think at current market price, we should go long with the stop loss of 2400.
Right. मयूरेश, पिडिलाइट इज़ वन ऑफ कोर्स, फेविकॉल का जोड़ आपको हमेशा मजबूती से काम करता हुआ दिखा है. Both of us have observed this stock for the last 20 years and it has made supernormal money for the patient long-term investor, now of course available at a difference of about 600 rupees from its all-time high. Apart of Pidilite, what else interests you in the mid-cap space? Something which can add value to the portfolio and is available cheaply compared with its previous highs?
I think a lot of stock shells have moved quite, significantly higher. So I think the cheap factor and the quality factor probably is very, very minuscule in the markets. So what we have picked out again, both from a Diwali picks perspective at William O'Neill and what remains on our buy watch list, are stocks like Bikaji, as an example. Again, numbers were very good in the quarter gone by. Now, the core expectation here is the sheer size that is available in the market. They have expanded their capacities, both in terms of the Indian ethnic sweets, specifically the namkeen part of the market, which is a bulk of their revenues as far as the product mix is concerned. And because of the capacity expansions that they've probably done, volume growth should be significantly higher and keep on expanding. The second element in terms of the control over input costs, because of a lot of supplier contracts that these guys probably have, because of the sheer size that they probably manage, expectations in terms of volatility in floor prices, edible oils, I think a large part of that volatility is behind us at this juncture. And therefore, gross as well as EBITDA margins should show significant signs of stability. Now, the entire concept of operating leverage, as we see it, with expanded capacities, expanded volumes coming through, and stable and some increase in margins that we can probably see because of operational efficiencies, the bottom line growth or the earnings growth that we see at Market Space India through our EPS rating can actually go higher in the next few quarters and years. We have not even entered the festive quarter. So the festive quarter is Q3. And Q3, Q4 are expected to be the strongest quarters as far as discretionary demand, specifically when it comes to ethnics, packaged foods, packaged sweets are concerned. And therefore, I think this is very, very appropriately placed at this juncture. Again, valuations are not below book or cheap at this juncture, but is there significant amount of growth that earnings can probably give and deliver for this stock? Our belief is it certainly can.
Okay, absolutely got that. And a very good morning, Mayuresh. Festive greetings to you and your loved ones. Always good to have you on BTTV. But, talking about this mid-cap and small-cap space only, mid-cap continued its upward trend for the sixth consecutive session yesterday. But small-cap index snapped its 5-day gains. So anything that you like from the small-cap space? Mayuresh, can you hear me? Okay, I think he is not able to hear us, but we'll get back to him. Meanwhile, Mr. Jani, anything that catches your fancy when it comes to when it comes to small cap space?
So in small cap, we can like many of the counter. I would like to highlight one of the counter which recently listed, that Concord Biotech. If you check Concord Biotech yesterday, price sorry, prices has given a breakout. Earlier we have seen on weekly chart, prices has given a close on its traditional resistance somewhere around 1200, and now stock price is trading above 1300. Looking at current market price, we are seeing that stock price can touch upon 1500 to 1600. So Concord Biotech, we are like in the small cap space. So if any dips comes around 1300, we would like to go long on Concord Biotech for the target of 1500, and we like to keep a stop loss below 1250. So 1250 would be the stop loss, and if dips come, we would like to go long for the target of 1500.
I'm sorry, we didn't catch the name. Is it Concord Biotech?
Yes, Concord Biotech.
Yes.
Okay, we've seen a 3-day rally on this one from 1150 to 1368. At least the chart looks overstretched to me. Let's see, but this is something that you can look at according to Mr. Jani. We'll of course keep an eye out on all these counters. Pretty light and Bikaji as far as Mayuresh is concerned. Crisil, Nippon, and Concord Biotech from Mr. Jani's stable. Okay, ladies and gentlemen, we have the pre-open rates. The Nifty is opened mildly in the green, 20 points higher at 19,412. And let's look at how the heavyweight section has opened as of now. Tata Motors 1% higher, 655. Infosys flat at about 1377, down up 0.2%. Let's look at what the two heavyweights are doing, super heavyweights actually. I want to see what HDFC Bank is doing, flat at about 1484, a downtick of 0.3% now. How about Reliance? Down 0.1%, 2307. Nothing much as far as trades are concerned. 36 points lower on the Nifty now. 19,350 is within sight. Okay, the top loser is Axis Bank, 1% lower, 1011. ICICI Bank is down 0.5%, 932. It's the banks that are creating the problem. So all four private sector banks on the Nifty are in the red. HDFC Bank down 0.3%, Kotak down 0.5%, ICICI down 0.5%, and Axis losing 1%. The gainers are Tata Motors, State Bank of India. So that's the trend as far as the pre-open trades are concerned. We'll just get back to them in a while. Let's shift focus to F&O and look at stocks beyond index heavyweights where you see some kind of fresh move coming in. ABB, strong set of earnings, 3% higher, 4438. We've been highlighting on the technical charts PI Industries. This is a very, very well-known chemicals player, 2% higher, 3720. One of the best known multi-baggers over the last 20-25 years that has created immense wealth for long-term shareholders. Then we have Birla Soft trading 0.5% higher, 586. I'm not seeing any kind of good traction, good names coming up within the top gainers, so that's a bit of a problem. Quiet list on the NSE 500 as well. We don't often discuss BEML 4% higher, 2183. You have these are the stocks that I won't want to name on air, but that's how it is. Nothing much as far as the pre-open trades are concerned. Nifty down 60 at 19,335. Let's get back to Mayuresh and discuss the broader themes that are running in the market. Mayuresh, to you, Mahindra and Mahindra, the earnings are likely to come in today. The stock has been beaten very badly over the last 2-3 months or so. Some respite coming in yesterday and this week as well. Your views on Mahindra and Mahindra ahead of earnings?
So Shelson, I think, has been an absolute outperformer in the past few quarters. And the SUV portfolio should largely hold up, like we've seen in the case of both Maruti and Tata Motors coming in for their product mix as well. I think the commentary is something that should do the trick. I think a whole host of managements have indicated that input costs had softened. But again, you have seen some element of rise in input costs. I was hearing as an example the Kalyani Steel management, which probably supplies to these automakers as well. And they are pushing in for some price increases, which means that if this is probably approved, some price increases in Q3, Q4 obviously come through. A large part of the order backlog and the footfalls and the entire transition towards their EV platforms have been very encouraging. I was in fact traveling over the past few days and on our state highways, I saw a lot of XXUVs probably move around and many more will come. So I think this entire transition that M&M, Tata Motors, Maruti is probably doing from the internal combustion engines to the electrical mobility part, I think this transitioning is happening at a very good rate. And therefore, I think the next few years is going to be extremely lucrative from an earnings perspective as far as the auto sales are concerned. As far as the farm equipment business is concerned for Mahindra and Mahindra, tractor sales might be a little bit subdued. You've seen deficient rains. And therefore, how the Rabi season probably plays out is going to be extremely important. But I think the new launches that they've done below the 50 HP category, and obviously there is competition on the rise there as well. But I think there is sufficient space for this part of the market to grow as well, and this part of the segment as well. So my expectations is it's a structural story, maybe numbers a little bit subdued for the next 2 quarters. But but I think it should bounce back very, very smartly. So I think anybody holding on to the stock should continue.
For you, and good morning again, Mayuresh. Festive greetings to you and your loved ones. I hope you can hear me now.
Yes.
Great.
Yes, I can hear you.
Okay, great. So actually, I was talking about mid cap and small cap space, Mayuresh. All these, chota package, bada dhamaka since it's Diwali. So I want to talk to you about that. So mid cap index, if you see, that was up for 6 consecutive session yesterday, and small cap, it snapped 5 day gains. So any stock that catches your fancy when it comes to small cap space?
Good morning, Tanya. Festive greetings to you, your loved ones as well. I think जो आपने बात कही, छोटा पैकेट बड़ा धमाका, इतना भी बड़ा धमाका नहीं होना चाहिए कि लोग डर जाए. तो I think थोड़ा quality पे focus करते हैं. So I think we are very, very selective here. And what our take is that urban discretionary spending, specifically in the ultra HNI pockets, is still continuing at a healthy pace. And therefore, there is a proxy to this story, which can be played through Ethos. So Ethos is a premium watch brand. And they're doing reasonably well. So the last 4 to 6 quarters, I think the kind of growth that they've probably achieved in terms of both the exclusivity, in terms of the number of brands that they've got, reflected and exhibited appropriately in terms of top line growth, I think has been exemplary. The second element in terms of more variants getting introduced over the next few quarters as well. And the sheer target audience. So if you go through the annual report of what Ethos is probably saying, the kind of ultra HNIs can actually double in the next 3 to 4 years. And the kind of spending demand that can probably come through for this part of the market. You've obviously got a Rolex index in the US, which probably tracks how this market has probably functioned. And a replica of that can probably be exhibited in terms of the performance here as well. In fact, a more interesting data point is that if you probably track the last 10 years, and they've put that in their annual report as well, you compare the S&P and the index in terms of premium watches as well. The premium watches, specifically the second-hand watches, which is also growing at a very, very healthy pace in India and expected to grow faster than the first-hand watches, can do phenomenally well as well. I think it was the second best performing index in the last 10 years following the S&P. So I think Ethos becomes an interesting story of sorts from an urban discretionary spending perspective.
Of course, this is one of the most underreported but intensely competitive markets where a lot of money is being made, Mayuresh. In India, you have a waiting list of close to a year for a decent Rolex, and it gets worse and worse if you look at Patek Philippe. Yesterday, a gentleman was with us on the show. He mentioned this was Nilesh Bhai. Nilesh Bhai from Kotak Asset Management.
Oh.
He mentioned that buy things like a gold Patek Philippe watch when you think of stocks. Buy stocks in that sense that you pass it on to the next generation. And I mentioned that that watch is for 70 lakh rupees, waiting for 1.5 years. So why not discuss a good quality equity fund which you can buy tomorrow for 5,000 rupees, to which he was kind enough to share a couple of names. But I agree completely. Ethos is something that long-term values can be created because the watch market in India on the luxury side is booming. It's unbelievable the kind of watch portfolios that the rich and the ultra HNIs have, which Mayuresh deals with. I have heard of 20 crore rupees of watch portfolios in Delhi, and it's getting better and better. All these watches appreciate over time. So whatever you buy today for 5 lakhs, 20 lakhs, 50 lakhs will be sold for 8 lakhs, 35 lakhs or 75 lakhs 5 years, 7 years down the line. So that's how life is. Wonderful picks from Mayuresh today. Ethos, Pidilite and Bikaji. So if you are interested in food, go for Bikaji. If you like long-term relationships, it's Pidilite, Fevicol का जोड़. और अगर आपको अपना समय बताना है समय के अलावा तो Ethos. Tanya, what are you watching?
Shell, I think what I'm watching, I want to discuss some of the stocks that will be in focus ahead of their numbers. And I actually want to discuss pharma space with Mayuresh, and then I'll come to Mr. Jani as well. So, pharma, if you see, Mayuresh, the index extended its uptrend to the seventh straight session yesterday, and that is on the back of robust quarterly earnings, coming in from large cap majors. If you see like Sun Pharma, Dr. Reddy's, Alchem, Lupin. So
Yeah.
what are your thoughts when it comes to pharma space? Any stocks that you like from this particular space?
So, Tanya, as a clear disclaimer, we do like two stocks, which is Cipla and Sun Pharma. I think those might be the very obvious names that might crop up when you speak to a lot of analysts. But post numbers, I think what Cipla has probably indicated in terms of EBITDA margins, as an example, 23 to 24 odd percent, the US formulation numbers should hold up and increase going forward as well. I think that's a very, very positive aspect that you're probably seeing. And a couple of the respiratory drugs are in late stages of approval, both in the US and the EU markets. And there's a huge addressable size for that. So if that probably comes through in the next few quarters, the top line growth will be even better than what the street is anticipating. Obviously, I think valuations compared to the last 4 to 5 years averages are a little bit on the higher side, but I think it is coming on the back of good growth. Similarly, for Sun Pharma, almost 7 molecules in different stages, and they are high specialty molecules that you're speaking about. The R&D spends are going to be on the elevated side because they're creating this specialty pipeline, which on approval in the next few quarters and on monetization can have a huge impact in terms of revenue growth going forward. Any positive triggers that come through in terms of FDA approvals for their concerned plants will obviously act as a kicker in terms of additional activity and earnings growth as well. So I think these two from the large cap names. From the mid cap space, Torrent Pharma again is something which looks very, very interesting because they are into branded generics. And branded generics is where the realization growth has held up pretty well and is expected to continue. Their foray into Germany, Brazil in high generics products is playing good yields. US markets have been lagging for them, but the expectations of product launches in the next 3 to 4 quarters will mean that from the second half of the next financial year, the US numbers will also show a significant amount of change. One of the highest margin reporting companies, 29 to 30 odd percent, and reasonable amount of return ratios. So from the mid cap space, something like a Torrent Pharma can also continue.
Got that. And I'll come to pharma space again, Mr. Jani. But firstly, coming to you for Coal India, because we have numbers today. So, what should be the strategy ahead of numbers, and what do the technical charts suggest?
So coming to the Coal India on daily chart, it's clearly a breakout candidate. Yesterday we have seen the long-term resistance somewhere around 320 was crossed last day only. Today the stock price is trading about 320. With that stock price, momentum indicator is also in bullish zone. Yesterday, whatever moves comes, it was a volume and open interest back. So clearly long build-up is also there. So Coal India looks very promising. If any dips come because of the results are there, so there are chances of expectations and the result might not meet. So if any dips comes around 320, 315, it would be the buy opportunity. Keep a positional stop loss below 310. And looking at current chart, we are definitely heading for 350 level. So Coal India looks very promising. Any dips would be the buy opportunity, and stop loss will be the 310, 310.
Okay, so 350 is what Coal India can look at. We have earnings today. Mr. Jani, your view on Mahindra and Mahindra? There was a very sharp burst yesterday ahead of earnings. What are the charts telling you? Let's presume the earnings will be in line with expectations. It was the top gainer on the Nifty yesterday.
So Mahindra and Mahindra or even an entire auto space into the time correction zone, number one. Now coming to Mahindra and Mahindra, we are seeing that stock price is trading into the falling channel, number one. Number two, stock price is facing a resistance of its all moving averages. And the range is somewhere around 1560 to 1480. So this 80 rupees range is there. Either side breakout will lead the further trend. So at current market price, we would like to wait and watch only. If any dips comes towards 1500, then we can look around buy with the stop loss below 1480. Otherwise, I will suggest let's wait for some time. let's come deep somewhere
Right,
around
sir.
1500 or maybe the breakout from 1850 level.
Right, the markets have opened, ladies and gentlemen. It's a 53-point cut on the Nifty, 19,341. Remember, it's the first day of a fresh weekly expiry on Nifty, and we are also at the weekend. So traders will probably try to book a lot of profit which they've made over the last 2 weeks ahead of the festival demand. Okay, this is how the markets are at the moment. 140 points down on Nifty Bank. The Nifty IT and the Nifty 500 index have opened lower as well. Now let's look at the heavyweights within the Nifty. HDFC Bank down 0.2%, 1482. How about Reliance? Down 0.2%, 2304. How about Infosys? Down 0.3%, 1370. With these three stocks down, it's very, very difficult for the Nifty to come into a green tick. What is the top gainer within the index heavyweight space? Tata Motors flat at about 650. There's nothing much happening. How about ICICI Bank and Axis? Axis is down 0.4%, 1017. ICICI Bank at 932 is 0.5% lower. SBI is also down 0.3%, 576.25. Tanya, there isn't a single stock in index heavyweights on the Nifty which is in the green, so you know how the opening has been. FNO stocks minus the index heavyweights, top gainers. A fresh name coming in here. Motherson Sumi 1% higher, 9130. Hindustan Aeronautics ahead of its earnings, 1.5% higher, 2060 is what I see. Power Finance Corporation, no stock stopping this stock, fresh record high, 1.5%, 281.50. Strong moves coming in on ABB post earnings, 1% higher, 43.50. Balrampur Chini days high. Lupin also days high. Pidilite running ahead. This is something that Mayuresh had suggested. Okay, let's look at NSE 500 and then we'll reach out to Mr. Jani. Okay, the top gainers are Midcap IT company eClerx 5.5% higher, 2168. We have Brigade Enterprises fresh record high, 2.9% higher, 715. Bombay Stock Exchange ahead of its earnings, 2.5% higher, 2011. Torrent Power, Jindal Saw, Natco Pharma, PFC and Hindustan Aeronautics are also in the green. What's on all-time high? We've discussed all three stocks, PFC, RECL and Power Grid. This is how the market has opened, 50 points lower. Let's look at the advance decline ratio in the broader markets and then we'll reach out to Mr. Jani. Okay, we tracked 19 indices, ladies and gentlemen. 16 of them are in the red. The top gainer is Realty Index, nothing much to talk about except flat. Energy is also flat. The top loser being the Nifty Bank, 0.3% lower, 43,530. And advanced declines is evenly stated, 1:1,942 versus 836. Nothing much happening on the broader markets. Individual stocks are taking it away. To you first, Mr. Jani, anything that catches your interest in the markets which may have opened strongly?
Looking at current market price, Coal India will be the stock. However, the earnings are there, but in this falling market, Coal India is holding its breakout level. So Coal India is the stock which we are liking. So if any dips comes around 320, which are the breakout level, so Coal India is the first candidate which we are liking. Another counter on large cap space only we are liking, that is ONGC. So ONGC is also trading near its previous breakout level. Yesterday we have seen that prices has given a profit booking. However, today market is open at lower level and then recovering. Currently, Coal India is trading above 194 level. Considering the intraday charts and daily chart, it has given a breakout from rectangle pattern as well as rounding bottom pattern. So ONGC can be the candidate where we can go long at current market price, keeping a stop loss below 190. And looking at the current market price for the intraday point of view, we are looking target of 200, and for positionally 210 can be achieved in near 10 to 15 days. So ONGC is catching the eye. I guess we should go long on ONGC.
Okay, I think we should pull up Apollo Hospitals, RECL, PFC, and PFC is actually the journey is just onwards and upwards for PFC. It was one of the top gainers yesterday as well. Mr. Jani, coming to you for a quick technical check on PFC first and then RECL and Apollo Hospitals as well.
So coming to the PFC is trading on higher low, higher top pattern in rising channel, and currently it's trading its all-time high. So patterns are a little bit stretched, but we can have a stop loss below 260 level or maybe 265 is the stop loss, and we can go long on any for at current market price. Looking at current chart, we can see 300 would be the target. So yes, PFC can be the long candidate. NTPC is the next counter. Here we have seen that a small profit booking zone has been created, the stock price into the time correction zone. Also, it has a support of its 20 and 50 days moving average. So NTPC, I would like to wait and watch. If any dips come towards 220, then we would like to go long. And last stock, Apollo Hospital. Looking at current market price, Apollo Hospital has given a breakout from the flag pattern, and today is retesting those breakout level. So Apollo Hospital, we can go long, but let's wait for the dip. Market is also showing us profit booking things. So I think for Apollo Hospital, we should have wait somewhere around 50 to 60 level. If those level comes, we can like to go long with the stop loss below 5200. And looking at current market price, we can at least have a target of 5500 in upcoming time.
Right. Let's look at the broader markets, Tanya. I think it's a flat opening. Nothing much is happening because of the weekend and festivities ahead. Mayuresh, anything that catches your interest ahead of earnings? Two stocks are moving very, very sharply. Hindustan Aeronautics, 2068 in front of me, and of course we have a very decent move coming in Birla Soft as well as KPIT Tech. You want to comment on any of these three?
So HL, I think a large part of their order win, which has now been announced yesterday itself, I think is creating a huge impetus in terms of the prospects that the revenue visibility can bring through. Obviously, I think the float is a little bit on the lower side, which means that the kind of price action that comes to the stock is significantly higher. Apparently, Shell Sir HL also forms part as a clear disclaimer of our Diwali picks for this year. So to that extent, I think the expectations of earnings growth remain strong. The second element in terms of midcap IT companies, like a KPIT, like a Birla Soft, I remember very clearly we spoke about this in last Friday's interaction as well. Both of these stocks are geared up very, very strongly. In fact, Birla Stock quarter-on-quarter EBIT margin growth. I did hear the management out that you were interacting with as well. And the expectations for both of them in terms of order wins, in terms of price stability, in terms of demand remaining intact, in terms of execution getting reflected in terms of margins, and correspondingly constant currency growth along with dollar growth expected to be on the higher side when the entire market is probably looking at okayish numbers as far as the large cap IT space is concerned, looks very, very promising. The only issue here, again, is that they have moved very, very strongly over the last few months and quarters, which means the valuation comfort is definitely not there. But can the momentum continue? Absolutely, yes. So I think any investor holding on should ride momentum in this space.
Yeah, absolutely. Momentum is likely to continue. That's the word coming in. Coming to you, Mr. Jani, for a quick technical check on KPIT. I mean, the stock continues to outperform, and how? What do the charts suggest at this point in time, and especially at these levels?
So KPIT is one of the outperformed candidate into the mid-cap IT space. We have seen the recent breakout at somewhere around 1250 level. Considering that ascending triangle pattern breakout, the target is somewhere around 1500. So at current market price also, we can go long, and if any dips come around 1250, 1260, that is also a buy opportunity. So one should have a patience for the target of 1500. It's somewhere around next quarter or maybe 3 to 4 months. If you have a patience, you can go long on KPIT at current market price. Also keep a stop loss below 1230, and the prima facie target is 1500, and if 1500 cross, we can see more upside is coming. So stock is in very strong trend. We should go long.
Okay, absolutely. And the stock on my radar is CDSL as well. I mean, coming to you first, Mayuresh, for CDSL. The stock is actually on a roll after the company posted its second quarter numbers. So, what are your thoughts on CDSL? I mean, will the momentum continue going forward as well?
It might. And again, I think the proxy that probably exists because BSE has done exceptionally well with the kind of new products that it has introduced, the expectations of annuity fees moving higher. Again, the proxy for BSE becomes CDSL. And obviously, numbers have been very, very good. Can the momentum continue? Absolutely, yes. Is there a valuation comfort? No, I think the stock has moved up significantly higher. But is there a scope for momentum to continue in this stock? Oh, yes. Do you need to have risk management tools in place in terms of your exit options because of such strong moves that we've seen both for BSE and CDSL? Absolutely, yes. I think Kiran will be the right person to tell you. Because at O'Neill, we track these moving averages very, very closely. And therefore, with such strong moves that we've probably seen in such momentum stocks, which move significantly higher from their 200-day moving average, which both of them apparently are, I think you should have your risk management tools, which should ideally be your 50-day moving average as your exit option if the stocks do tank for any reason.
Okay, absolutely. And coming to you, Mr. Jani, now for a quick technical check on CDSL. What are the charts telling you?
So CDSL is also a very strong candidate. It is trading it's on near all time high. So it's a fresh breakout candidate. So as far as stock price is trading above 1700 or 1600 odds level, we would like to go long, keep a stop loss below 1600. And as mentioning that stock price is trading its all time high, there are chances that we can see price target of 2000, considering its previous breakout level of inverted head and shoulder on weekly or a daily chart. So based on that pattern, we can see target of 2000 rupees. So CDSL is also a very good candidate. Any dips come, we should buy. Keep a stop loss below 1600.
While both Mayuresh and Mr. Jani have been very, very bullish on the prospects of CDSL, and very rightly so, the fundamentals are phenomenal, as Mayuresh points out. And yes, it's a blowout that's happening on CDSL as far as technical charts are concerned. But I'd just like to interject a note of caution here. It's quite how should I say, the risk reward after a rally which is over 9-10 days old. The stock has moved from 1274 to 1700 rupees in a single breath. So one has to be very, very cautious trying to chase this momentum. Yes, the fundamentals are great. Yes, the charts are great, but one has to be very, very cautious. And as Mayuresh says, keep a very close stop loss. Should the stock correct, then of course it's a portfolio buy. And as Mayuresh rightly said, it's a catch-up rally with the Bombay Stock Exchange. Both these stocks have over a long period of time have had a probability of 1, which means that 100% correlation when they move together. BSE has shot up dramatically. It's the catch-up trade which is coming in on CDSL. So stocks that we have discussed which are doing fairly well: KPIT, fresh record high 1347. Coal India taking it away 326.45. This was the pick that we first discussed after markets opened. I'd like to come to you, Mayuresh, on the kind of earnings that Trent India has come up with. Stock at a record high. We had a blowout quarter, this one, and the first quarter as well. How are your analysts analyzing Trent? Sadly, again at 2500, what can be done? Good things don't come cheap, and Trent is one of them.
I think that's precisely the point, Chelsea. And I think the kind of exuberance that the price is exhibiting, I think the earnings is something that is not paying heed to valuations at all. I'll give you some interesting numbers which have got reflected. So in the previous financial year, they posted a top line of 7,500 crores odd. For the first 2 quarters, they're already at 5,500 crores, and we have not even entered the festive season.
Nice.
Now, the festive season quarter and quarter 4, if you just assume a hypothetical move that the first half has given, it should merely cross around 10,000 crores just in terms of top line. Now, let's come to the earnings or the EPS as we see it, right? It's 399 rupees for the last financial year. They're already at 439 rupees, which means the profitability that they've posted in the first half is higher than the entire profit that they're posted in the last financial year. So going just by sheer numbers, I think the earnings multiples should re-rate themselves on the higher side, which is getting reflected by the price. When it comes to the model per se, West side is 60%, which is doing phenomenally well in terms of SSG growth, and EBIT margins as well should hold out pretty strongly as well. For Studio, which is their mid segment in terms of pricing, accounting for 40% of standalone sales, should grow at a decent pace with EBIT margins of 11, 12, ROICs of 25%. And the contribution in terms of Starbucks, Zara has been improving every passing quarter, with losses reducing at Star Bazaar as well. So on a console basis as well, I think numbers are showing improvements reflecting price. Obviously, as you rightly pointed out, Shelter, things don't come cheap. And therefore, this stock probably, if it continues its journey in terms of earnings reporting, can continue its momentum. So anybody holding on, continue holding. Again, clear disclaimer, hold your risk management tools in place for such high momentum trades.
Okay, absolutely got that. And coming to, some of these stocks from the Adani pack, I think let's pull up Adani ports and see what's happening there on this counter. I'm just refreshing my screen. Okay, the counter is in the green at this point in time, 1.4% uptick there. 818 is the level at this point in time. Mr. Jani, coming to you first for Adani ports. What are the charts telling you for this counter?
So at current market price, Adani Port has given a breakout from its falling trend line, as well as Adani Port is trading above all important moving averages. With that, on intraday charts, it has given a breakout from the rounding bottom pattern also. So a fairly decent setup for the bullish trade. At current market price, 810, 815, we should like to go long, keeping a stop loss below 800. And looking at chart, we can definitely expect prices to touch somewhere around 850 to 860 level. So fairly a strong candidate. We should go long, keeping a stop loss below 800.
Okay, the profit is, by the way, up 4% to 1,748 odd crore, and it is impacted by one-off tax write-off. Coming to you, Mayuresh, quickly for Adani Ports. Your thoughts?
I think it's a good proxy to the entire India infra story, right, Tanya? I think the kind of port activity that it probably does, and I'm extremely sorry I could not go through the numbers if they have been reported. But generally, I think if you look at the historical trend, the kind of handling that they're probably doing and the automation that has probably happened at their ports is now significantly higher. The acquisitions that they have done in the recent past will definitely aid significant amount of volume growth. The only issue here is the entire Adani tag and what probably comes out of the Supreme Court judgment.
Right, 9:32 in front of us, and time to bid goodbye to Mayuresh Joshi. Thank you, Mayuresh. We'll always remember Pidilite, Bhikaji, and of course Ethos watches. These are the three stock picks that Mayuresh has suggested for the long term. Again, festive greetings. All the best to you, family, and everyone at William O'Neill. May your portfolios multiply many times over the next 1 year. Thank you so much for your time.
Thank you so much, Shelter. Thank you so much, Tanya. Season's greetings to you as well. Happy Dhanteras, happy Diwali. Both of you, the loved ones, and the entire viewership that watches the business videos. Thank you so much.
Thank you so much.
Okay, let's shift focus now back to stock picking, and there are two stocks that may probably be giving you an occasion to step into them, both of them now below the intraday highs that we had seen a couple of days ago. To you, Mr. Jani, Zomato, 120.80. The most recent high that we saw was, I think, 126 rupees, if I am not mistaken. Just let me check Zomato. The earnings were pretty good, and we've been following this stock from the two-digit space. Okay, yes, the highest that we've seen is 126.90. Mr. Jani, where would be a good buy zone for this counter? Where would you suggest that, okay, let's get it and then play for another long-term rally?
So looking at currently Zomato daily chart, prices are trading into the height of high bottom pattern. It means in rising trend or a rising channel. stock is well above its all important moving averages. With that, we have to see that, as you mentioned, that it's fresh high somewhere around 125, 128, and the same level IPO week low is there. And we have seen that once that low has been broken down, stock prices has given a big downfall move in past time. So now coming to that particular thing, that 128, 130 will be the supply zone, and at current market price, we can see the support somewhere around 150. So this 15 rupees time zone, this 15 rupees price zone is will be the price correction. Will not happen. The stock price will remain consolidation in this 15 rupees for upcoming time. So the 115 rupees which we would like to go long. So any dips comes towards 115, go long, keep stop loss below 105. Looking at current price chart, our first price target will be the 130. Once 130 rupees cross, then there are chances that stock price can go further higher level, somewhere around 150, 155 level. So technical setup are very good. Let's wait for the dip, as market is also showing a profit booking move. So 115 will be the level where we would like to go long on Zomato.
Right. And the other stock, Mr. Jani, I want to take your views, is on Lupin. The numbers were fantastic. Somehow it seems in hindsight that the stock has gone up before the earnings came in, now in a bit of a reactive mode at day's low. What are the charts telling you? What would be a good entry level? At the moment, 1183.
So looping daily chart, or we can see Pharma as a pack. Very selective stocks are going at higher level. Rest we are seeing a profit booking move in Pharma sector also. Coming to the looping, looping has formed three negative bar divergence ahead of results. So it is a very cautious thing, or we have to be very resilient on this counter. So at current market price, we would not like to go long. The suggestion would be, or the advice would be like, whoever holding this stock, keep a very strict stop loss somewhere around 1130 or 1140. If prices are breaching 1120 or 30 level, then there are chances we can see further profit booking level. So at current market price, there is no idea to go long, definitely, and keep a stop loss of 1120 or 1130. If that zone broken down, then we can go for the short sell also on looping. So keep a very tight stop loss of 120.
Okay. Tanya, what are you watching?
Well, I think I want to discuss Tata Motors with Mr. Jani. Because the stock is in focus because Moody has upgraded its credit rating for Tata Motors JLR to BA3 from B1, and it has maintained positive outlook on all ratings. So coming to you, Mr. Jani, for a quick technical check on Tata Motors. I mean, what are the charts telling you at this point in time? Where is the stock headed in the near term?
So coming to the Tata Motor, the day stock has announced the result, we have seen a gap up opening. That gap up opening didn't sustain, and stock price from that day trading into the falling channel, and a small zone also, price zone. Current market price suggesting that very good support at 640 and a resistance somewhere around 660. So this 20 rupees range is continuing. Either side breakout will lead the trend. So again in Tata Motor also, if prices are trading somewhere around 640, 645, which is current market price only, so we can go long at current market price. Keep a very tight stop loss below 640. If the 640 level breaches, then there are chances we can see further downfall in Tata Motors somewhere around 600 and 620. So at current market price, if anyone would like to go long, they can go long with the strict stop loss of 640 and for the target of 660.
Okay. I think, Tanya, we need to mark Hindustan Aeronautics. It's. I hesitate to say this. We normally don't do a QC check before the earnings are here, and the fact that it's run up very sharply over the last 5 or 6 sessions. I'm just marking this on the screen. 2054 in front of me, and the day's high today is 2078. The reason why I point this out to you is that it's now close to its record high of about 2085, 2090. Just keep an eye on this stock. We have earnings today. Let's see what it does. But for the market, it seems to have paused. 940. Tanya, there's literally nothing moving. All my screens are quiet, and that's because I think traders are just rejoicing ahead of holidays, and nothing much is moving. Uh, the stocks that are moving, I don't want to point them on screen, and the ones that we wish to point on screen are not moving. So Nifty is again flat, 43 down at about 19353. Today's battle is at the 20 EMA, which is again 19350, 19370, 19380, depending upon which software you see, and nothing much moving for the index as well, between support 1 of 19361 and support 2 of 19326. Nothing moving at all. And Tanya, you remember we had discussed with some great trepidation a counter called Honasa Software, Honasa Consumer, better known as Mama Earth.
Yes.
Now down for the third day in a row, 275. And this is what happens when investment bankers insist on valuations which are not sustainable. Actually falling further. Honasa is now 267.40. That's how life is, Tanya.
Absolutely, that's how life is, and we have to be very cautious, when it comes to stocks. So, coming to you, Mr. Jani, for Ashok Leyland, because this company posted numbers yesterday. It reported 181% jump in its profit at 561 odd crore rupees, and the company had incurred a net profit of 199 crore in the same period last year. Right now, it is trading flat, actually in the red, 0.6% downtick there at 169. What are the charts telling you for this counter?
So Ashok Leyland, it is trading into the lower top, lower bottom. It means a falling channel. With that, prices has closed below its 20, 50, and 100 days moving average also. Yesterday, we have seen another bearish candlesticks pattern on daily chart. So all are pointing out that prices can move down level only. So I think we should wait and watch for the Ashok Leyland for the buying position. If anyone has this stock, keep a strict stop loss of 165. If prices are breaching 165, then there is a one more negative pattern comes to play. It is head and shoulder pattern. So 165 is very strong stop loss for the anyone is holding as of now Ashok Leyland. And for the fresh buying, we should wait only. Either we have to buy fresh buying above 175 level, or let's wait for any reversal sign plotted on a daily chart. As of now, there is no reversal sign visible on Ashok Leyland. 165 would be the stop loss. If 165 breaks, then we can go short sell also.
Okay. There is a stock that I'd like to mark, Tanya, which is Gujarat Narmada Valley Corporation, Fertilizer Corporation. This was a counter which gave tepid earnings 2-3 days ago, and now we see a decent bout of short covering which is coming in, which basically means that a lot of bears who had made their money are now sort of squaring off their shorts. Therefore, the counter rising. Mr. Jani, what are the charts telling you at the moment? The top gainer in FNO in a market that's absolutely flat, 691, no volume, but we have to check out some stocks with you.
So GNFC, it is in ban list also since couple of days. GNFC has given a breakout from its triple bottom pattern, or we can see ascending triangle pattern, and the breakout level was 660. Post that, we can see that prices has made a high of 700, and from that there was a small profit booking came yesterday, and it was tested its 20 days moving average as well as the previous breakout level. And after that, entire loss is being recovered intraday only. Today prices is crossing is yesterday daily high and 20 days moving average also. So stock price is again into the fresh uptrend. So considering all these things, no one can take position in F&O pace, but yes, definitely they can look around equity. At current market price, we can go long on GNFC, keeping a stop loss below 660. The stock price is very volatile, so stop loss is little bit higher. So keep a stop loss of 660, and considering the daily price chart and the pattern, we can expect target of 750, 760 on GNFC. So definitely we can go long.
Okay, absolutely got that. And Mr. Jani, coming to you for Federal Bank as well, because it is the only banking stock that is trading in the green right now. All the other stocks are trading in the red. Actually, it is marginally higher only, but still, I mean, what are the charts telling you when it comes to Federal Bank? 148 is the level where we are at on a flattish note, but still in the green.
So Federal Bank is it is into the time correction zone. Recently, we have seen prices has given a breakdown from its the range from 140 to 153. However, prices has taken a support from 100 days moving average, and it started again trading into the rising channel only. Currently, prices has crossed this 20 and 50 days moving average, and again it's consolidating. However, on intraday chart, it looks like a flag pattern only. So at current market price, one should can go long on Federal Bank. If prices cross its 150 level, then we can expect some short covering rally also, which can lead prices to touch 160 level. So Federal Bank looks very strong at current market price. Go long at current market price 148, keeping a stop loss below 140, and for the target of 160 to 165.
Okay, and what about these large cap banking names like SBI, Axis Bank, ICICI Bank? Any stocks that are on your radar that looks, good on technical charts for the near term?
So large cap bank, if we are talking, we like private banks. So there are two banks which we are one is a contra bet and another is a trending bet. So for the contra bet, we are liking Kotak Bank. Kotak Bank has formed a 3 bar divergence. We discussed last week also. Stock price has given a move after that discussion from 1720 to 1760. However, price is not sustaining 1716 considering the 50 days or 100 days moving average resistance. But at current market price, we are still liking Kotak Bank. If someone is looking for investment for 3 months, 6 months, then Kotak Bank will be the candidate at current market price. One should go long, keeping a stop loss below 1700. And looking at current market price, we will definitely expect price target of 1800 plus. So Kotak Bank is our first pick in banking sector. Another bank which we are liking in large cap candidate, it's the IndusInd Bank. IndusInd Bank has given a breakout from ascending triangle pattern recently. Stock price was facing a resistance somewhere around 1470. Stock price is comfortably closed and now it's trading at 1500 level. Considering the pattern which we have discussed for the CRISIL also, the same pattern has been formed on IndusInd Bank, and we are expecting target of 1600, 1650 in short time. So IndusInd Bank is another bank which we are liking in banking space.
Okay, absolutely, Mr. Jani. Thanks for these picks. Got that. But now it's time for us to shift our focus to the corporate side chat, and the company on our radar is Cummins India. The company reported 30% YOY jump in its net profit at 328 odd crore rupees. Gross margins have also expanded. To discuss the results and much more, we have with us the management of the company. We have with us Mr. Ajay Patil, who is the Chief Financial Officer at Cummins India. Very good morning, Mr. Patil, and first of all, festive greetings to you and your family. Good set of numbers coming in this time around, and gross margins they have expanded by 500 basis points. So I want to understand from you that what aided this recovery in the margins, and are these levels sustainable going forward?
Yeah, good morning to you and all the viewers, and Shubha Deepavali to you as well as all the team at BT as well as your viewers. I think from a Q2 perspective, I think certainly gross margin came out very strongly, and I would say that it is attributed to 2 or 3 reasons. The first and foremost is the way the revenue mix turned out to be for the quarter. From a line of businesses that we have, when it comes to power gen, industrial, or distribution business, and exports, when we looked at the mix of it, typically a mix tilting in favor of one or the other line of business tends to give us a better outcome on the gross margin side. And I think this quarter turned out to be so. Besides the mix, there are two other factors. One, the continued lag effect of the pricing played out equally strongly from a quarter's point of view. And then, of course, third part is the effort that we have internally in terms of how we manage our cost. So when I put these three factors together, it turned out to be a perfect quarter in the sense of how it impacted in improving the gross margin for the quarter.
Right. Mr. Patil, welcome to Market Today and Business Today Television. Warm festive greetings to you. And our compliments on this kind of financial performance that's coming from Cummins India. Of course, a very, very well-known company in the world of engines, in the world of compressors, and in the capital goods space. Mr. Patil, let's look a bit forward. Your stock in particular has been the precursor of this rally. A very, very sharp outperformance coming in over the last 2 or 3 sessions. Last 2 or 3 years. People will remember Cummins at 300 rupees at the bottom of the pain that we saw during COVID, and now at a fresh record high. Tell us the order pipeline. Tell us how your customers are interacting with you in terms of the orders they want executed.
No, good morning to you again. I think a few things in terms of how our business plays out to be. We effectively contribute or support all segments of economy. The way our products are, integral part of the economy. And therefore, when you see the broader theme with respect to how the macros have played out, we fully participate in terms of all of these macro trends that they play out. As an example, if it is infrastructure, if it is healthcare, if it is data centers, if it is digitization, if it is about how the fundamental infra is getting put in the country, whether it is ports, airports, railways, roads, each of those, we have a role to play from a technology or products that we provide for. That's number one. Number two, for last 62 years that we are in country, broadly speaking, over the years, we created a fairly good balance with respect to our revenue profile. Our exports have always been between 20 to 30%, depending on which period you take for comparison. And which would, what it does to us is that it provides us a good balance of our domestic and exports. And number three is how over the last several years, we have put on ground the kind of capabilities that we need. Whether the capabilities on the engineering side, whether the capabilities on the manufacturing side, or on the people side. And today, we are therefore uniquely positioned in terms of leveraging all of our strengths to get a product to our customers with the latest technologies that are possible to solve some of those problems. So to answer your question in a very simplistic form, because I gave you a long answer, is that we are today positioned from our product and technology point of view as someone who can actually solve a lot of our customers' problems in a most efficient manner.
When you look at the broader product mix from Cummins India, Mr. Patil, you have engines, you have powertrains, which form a very large portion of your revenue stream. And given the kind of problems that at least North India is facing with pollution, we have buses being stopped, we have trucks being stopped outside Delhi. What are the kind of changes that you are bringing in your engines which might help us at least sort out this pollution issue, or maybe nip it in the bud?
Absolutely. I think purely from an engine technology perspective, all the industrial equipments, when you look at whether it is on the construction equipment, whether it's on the diesel generating set, I think today, and especially after July 1st, when the new emission norms were notified under what is called a CPCB 4+, although these norms have a kind of an extended period from a full deployment point of view till June of 2024, but what we are seeing is that we were one of the first to really get our products certified and put them in the market. And number two, our products today comply to CPCB 4+ in every respect. and therefore our entire product range is available, and we see a good traction from our customers to buy this new emission equipment, although they have a choice of buying the previous emission. And precisely to the point that you mentioned, there is this concern about how the products are creating an environmental impact. I think the customers are getting greater level of awareness, and they are willing to therefore put their investments in buying these new technology products, which not only help them to be efficient in their operations, but also create a lesser impact from an environment point of view.
Absolutely, got that, Mr. Patil. But which big business segment is showing maximum growth at this point in time, and what would be your growth drivers going forward?
So I would make 2 or 3 points real quick. One is, among all the end markets, when we look at data center continues to be the one which is growing at the fastest speed, and it is broadly aligned with respect to the broader digitization trend that we see. Besides data center, the other end markets, be it on the commercial real estate, be it on infrastructure, be it on the rental side, or healthcare and others, we see continued stable outlook from an end market demand point of view. But if you are trying to call out a single end market which is growing at the fastest rate, that turns out to be the data center.
Mr. Patil, talking about your exports,
Okay.
what is your
Mr.
outlook when
Patil,
it comes to exports? Because Shell, I think we are seeing softness there. And I want to understand from you, are you seeing any signs of recovery, and what is your outlook going forward for the second half of the year?
Certainly, I think exports is something which we have seen some softness among the two, what we call the high horsepower and the low horsepower segment. So the low horsepower side, especially, we have been seeing some softness, primarily coming out of pretty much all markets, whether it is Europe, Latin America, Middle East, or Africa. But again, when we typically come towards the calendar year end, there is some bit of inventory rationalization that does take place. And not to mention also the fact that a lot of these end markets have their own economic reasons as to why their demand is softening to some extent. But given the position of our product, given the newer products that we have introduced, what we call fit for market, we do believe that the demand for these end markets will also sequentially recover in the coming quarters. On the high horsepower side, we have seen some softness, but not to a level what we are seeing in low horsepower side. What we see is that typically our product, which acts as a backup power, therefore from a need perspective, our product is something which fits into any project that the customers are undertaking. And therefore, from a continued demand perspective, I do see that our product will continue to have that demand structurally. And two, from a timing perspective, there could be a period of 1 or 2 quarters where there could be some softness. But medium to long term, we do believe that the demand outlook is fairly stable.
Right. Mr. Patil, you are at the crux of the capacity expansion cycle that we are seeing in India. When your customers interact with you, how are they projecting the next 3-4 years of capacity build that their factories are showing? What is the granular data that you can share with our viewers about how corporate India's capacity is expanding over the next half a decade or so?
Yeah, I mean, as I briefly touched upon, some of the end market side, when you look at starting with, I think, data center, we do see this as a multi-year trend where on the back of this continued digitization that we are experiencing, we do expect the data centers to continue the growth momentum that we have been experiencing over the last 2 to 3 years to continue. Number two, when we look at it purely from an infrastructure point of view, again, that is something which we believe is a long-term trend, be it on the railways, be it on the roadside, where we think there will be continued investments from the government, which bodes well for our products. And three, the construction equipment, again, we have seen a recovery in that particular segment, but we do believe there is still a fairly good upside that is available in terms of demand from construction equipment side, which should also kick in. We'll have to just wait and watch as to what that point of inflection is. So overall, if you're asking us, I think we do see a fairly stable outlook over the next coming years from all these end markets and the macros that are supporting them.
Okay, and since Railways is a big customer of many of your products, there has been this railway-led theme running fairly rapidly across Dalal Street. How are orders from specifically the railways shaping up over the past 1 year or so?
Yeah, railways, we have seen that there has been this electrification drive that Indian Railways undertook. And I think as we speak, I think they have done a tremendous job in terms of getting the broad gauge network electrified almost to the extent of close to 90% or more. What it has done to us is that we anticipated this trend a few years ago, and accordingly, we started to get newer products for supporting the railways. There is a bunch of products which are currently under what we call type testing, which are going to be supporting the electrified railway network. And some of the conventional products that we have offered in the past, those over a period of time will phase out and the newer products will kick in. So overall, from a railways perspective, that continues to be one of our strong end market. We have had long standing relationship both on the products as well as on the services side. And we do believe strongly about how that segment will continue to contribute.
Okay, absolutely got that. And
Right,
on
Mr.
that
Patil, thank
wonderful
you so
note,
much for your time, and we wish you the brightest future ahead as far as
absolutely.
Cummins India is concerned. More sales, more margins, and more profitability to you, sir. Our festive greetings to everyone at Cummins India, your family, and to you.
Thank you so much, and all of you once again, Shubh Deepavali. Thank you.
So that's it, ladies and gentlemen. We'll wrap market today here. There are very few stocks that we discussed today because the market is absolutely flat. We started 56 points lower, 58 points lower on the Nifty at 9:15. We are still down 56 points. So nothing has moved as far as the index is concerned. And the same is the situation with the Nifty Bank, down 114, 43,571. We have discussed 3 or 4 stocks. Pidilite, days high. CDSL, days high. KPIT, days high. And Coal India, days high. Tanya.
Wow, bang on for that, Shail. And happy Diwali and happy Dhanteras to all our viewers. May your portfolio, continues to shine going forward, and the stock market journey, I think that should remain onwards and upwards always. So on that wonderful note, very good wishes to all our viewers. And Shail, it's Diwali. I think everyone's busy celebrating. That's why not much happening on the last street. But with that, it's a wrap, ladies and gentlemen. And lots more coming up for you. Don't go anywhere. Just stay tuned. And many thanks for watching.
Welcome to Business Today Television. I am Karishma Sudani, and joining me today is the Chief Financial Officer of online travel agency Clear Trip. It's the season, festive season, followed by, of course, a busy time for the travel plans. Aditya, thank you so much for joining us on this show.
My pleasure.
Aditya, to start off with, quite a busy time for you. Of course, Q3 always turns out to be pretty busy in terms of bookings and occupancy. What are the kind of festive trends that you're looking at?
Yeah, you're right. This is a super busy time for us as an industry, and this is the peak season for the entire travel industry. We are seeing some very interesting trends. Now we are probably in the first full year of recovery post-COVID, and our overall volumes have long exceeded the pre-COVID levels. So in this festive season, we are seeing increasing demand for leisure travel and visit to friends and families as compared to business travel. This is one of the key trends. This is also a time when we see a spike in overall occupancy and therefore in overall fares. That is also being seen, which is consistent with past trends. We also see an interesting mix of destinations where, as people are traveling back maybe to their hometowns to celebrate the festival with their families, we're seeing a lot of spike in bookings to tier 2, tier 3 towns.
Great. Like you did talk about, of course, it's Diwali weekend and people are getting back to their homes. Do you have any data churning in terms of which routes and which destinations are actually doing well when it comes to the Diwali travel?
Yeah, so like I said, this is a time when we see a lot of traffic go from, say, metros to tier 1, tier 2, tier 3 towns. So some of the top destinations we've seen this year include Lucknow, Bhubaneswar, Guwahati, Varanasi, Patna. Some of these have outperformed even some of the other cities and other tier 1, tier 2 cities. These have been the top selling destinations this Diwali season for us.
Great. And you did talk about the surpassing the pre-COVID travel, and also, of course, how the last 1 year has been like. In terms of demand and in terms of, passenger traveling behavior, has that also gone better now in comparison to pre-COVID?
Absolutely. So I think we are seeing some of the confidence come back. We have